Welcome in the management of Symphony now. The company reported good set of numbers. Revenue from operations are up 76%. Margins have expanded from 8.6 to 21%. And there is a buyback to boot. We've got the management with us. Nrupesh Shah is Managing Director of the company. Mr. Shah, good morning. Great to have you with us here, sir. Congratulations. Prashant this side. The numbers we'll get to in just a bit. We just had the management of Blue Star telling us that the environment is looking super solid, and I'm sure you'll concur. But the buyback first, what was the rationale, sir, for the buyback? Because, we're looking at the numbers. Even if you as promoters don't participate in the buyback, the acceptance ratio is going to be minuscule. So does it really benefit anyone who really wants to tender in, and in what way? So what was the rationale and the size of it, essentially?
No, so thanks. As you may be aware, we have a stated payout policy of at least 60% of the profit after tax. And secondly, considering our business model, despite robust and consistent growth, whether for our standalone business or subsidiaries, we don't really need much cash or capex. More than 90% of our PAT is free cash flow. And hence the payout can be in two forms. One is dividend and secondly is a share buyback. By doing the share buyback, number one, we convey in a way what we believe about the future and potential by conveying the price. Secondly, to that extent, it also positively impacts. Of course, it is very small, but about the EPS as well as valuation metrics, and ultimately proportionately it benefit to all the shareholders. And considering the latest budget amendment, end-to-end in terms of the taxation until 30th September by resorting up to 10% of the net worth, one can conclude before 30th September, and end-to-end there is a good taxation.
Mr. Shah, my only point is you could have done a larger one, right? Which really, makes a big difference. If the, as you said, the policy is to return so much cash to shareholders, you could have gone in for a bigger sized one, because, as I said, even if you as promoters don't participate, acceptance would be 15 shares for every 1,000 shares.
No, so as I said, we resorted to 25% of the net worth, that is 200 crore plus about 14 months before. And this time for the quarter, the PAT is 88 crore. And total payout versus 88 crore, including taxation to bear by the companies in excess of 95 crore. So by resorting to this, we are giving a payout in excess of 100%. And secondly, as I said, if we had gone for a larger buyback size, it would have extended beyond 30th September. Then end-to-end, the taxation arbitrage, we would have lost. In turn, shareholders would have lost.
Hi, Mr. Shah. Good morning. We get that rationale. Are you participating as a promoter entity in the buyback?
Not yet decided. As of now, board has approved this, and board has just conveyed yesterday, and record date is 21st of August. So in the due course, it will be decided. But I see no reason why promoter should or should not participate.
Okay. Actually, sir, you're sitting on the fence then. The street would like to know which way will you swing, but we'll wait by for clarity on that front. Ideally, if it's for shareholders, maybe the promoter entity doesn't participate. We'll wait by for clarity on that front. But your operational performance has been good. And a couple of brokerage notes are believing that FY25 is going to be the best year in the history of the company. Could you tell us what do you end this year with? To give a reference point, last year your total sales, I think, were around 1,200 crores, with the standalone business contributing 800 crores. So for this year, what do you end with? And also, what was record-breaking in the past quarter was your gross margins at 51%, EBITDA margins at around 21% as well. Give us a guidance on both those two parameters for FY25.
So as per our IR policy, I cannot share the specific numbers or guidance for the ensuing quarter or the year. But obviously, so far, whatever initiatives and measures we have taken in last 3-4 years in terms of expanding the product range, on top of it, just yesterday we announced launching 17 new path-breaking models in air cooler. In addition to that, also entering into water heater. Of course, in year 1 and 2, it won't be really meaningful. And on top of it, now we have a decent presence in semi-urban as well as rural market, on account of continuous expansion. And even our D2C has registered the EBITDA margin percentage in line with the normal business, which was negative until last time. So we are quite
Mr. Shah?
confident.
Mr. Shah, we're running a little short on time, sir. Just wanted to confirm that this year will be the best year ever, right? Historically, the best year for the company. And by when do you get to that 30% margins? Very quickly.
Quarter has been the best. We hope it will be and should be the best year ahead. About 30% margin, we are ensuring and trying our level best to reach to that level. But our June quarter EBITDA margin has been the best ever.
Okay. All right. We'll wait by for further clarity then, Mr. Shah. Appreciate you joining in and filling us in with all of those details. We look forward to this record-breaking year and for clarity on the buyback as well. For the time being, though, we slip into a short break. Come back.